Hi, this is Joseph. Today it's Monday. It's July 8th, 2013, and we're going to do a review of how we actually traded in the alumni members chat room. And it's something that all of the traders who complete, and my students that complete the 7-week trading course, they're able to enter into the alumni chat room. And there I call live trades. And I also review strategies similar to what we're going to review today. On this particular day, what we had was, obviously with Friday, a couple of days ago anyway, one business trading day, was non-farm payroll. So we know that in many instances after non-farm payroll, we have a couple of choices as traders. So do we expect price to continue in the direction that it went or was headed in with non-farm payroll? Or do we expect a bounce? Now we're going to move past that information. Was non-farm payroll really that big a surprise? There's a lot of ways to digest that information and then try to determine the next potential direction. But even so, I still wait for a particular candle pattern. So I felt that it was best, if you watch the weekly analysis video that I have posted on the website, I felt that it was best that we trade an HL30. Not a continuation trade necessarily, because there wasn't sufficient amount of consolidation, but an HL30, which is basically a bounce. That's what we did here. This is the pound dollar. This is a 30-minute time frame. And you'll notice the indicator that I'm using here is the CCI indicator. Now, there is what I call a 10 pip range. So based on Friday's price action and the low, which printed on 48.57, 1.4857, price needs to move. Let's go back to the market open on Sunday. Price needs to move all the way back down to a 10 pip range. So you'll notice on that very first 30-minute candle, it only goes as low as 91. And the actual low here was 57. So price would need to come down to 67 in order to qualify for that 10 pip range. So let's take this out a candle or two, and you can see just about how long I actually had to wait. So even with price then approaching and making that low there at 67, I still need to wait. Once I see that, now I've got the 10 pip range, but I need to wait for the the reversal signal candle, which is the HL30 pattern. And it is usually an engulfing bullish or bearish candle pattern, or evening star or morning star, depending on which direction you're trading it in. So here is my actual entry. You'll notice I don't really get an entry and solid CCI confirmation until it tests one more time. This is, again, 30-minute candles. We're looking at 1 hour, 2 hours, 3 hours, 4 hours, 5 hours. And then about 6 hours, 5.5 to 6 hours after the market opened, I get my signal candle. And my entry is on this close of this signal candle. It's an engulfing reversal signal candle off of the previous day's support. Perfect. I get in on the close at 48.80. That's where we entered the trade. It's a 20 pip stop and a 20 pip target on this trade. So this was a safe trade. We're looking for 20 pips, so that would bring it right to the psychological level of 4,900. Let's see how long that took. Remember, a 20 pip stop and the 20 pip target. And that goes as high as 96. The next candle goes as high as 95. And there we go. That following candle was 97, and then 3 candles later was 49.05. So we reach our 20 pip target there. Now, I've often said that you can, and I recommend, if you can, put on more than one lot. You would take 2 lots, for example, and place it on this trade at the open on that signal candle, and you would lock in and close the first lot at the first target, which was 149.00. And if that first target of 149.00 is achieved, you lock in your profits on the first target, close that one on the first lot, and then set the open final remaining lot, or lots, the position, to a break-even stop. Meaning that if price then comes back down to, let's say, 1.48, if our entry was 80, let's just say 82, it would close the second half of your position, or the second lot, at break-even, and you would effectively lock in the profits from the first target, earning approximately 20 pips. So let's see what happened here. So the second target would be another 20 pips. So we would be looking for 1.4920. And that candle here went as high as 21. So that's when we reached our second target. And you'll notice on the pullback, it only goes as low as 97, with an entry of 80 and a break-even stop of 82. So the second lot was allowed to continue to that second target. So effectively what you've earned with just 2 lots, you can do this with a mini, a micro, a standard. I have many students that exclusively trade this HL30 in the chat room. That's all they do is trade the HL30 whenever it sets up. They earn $10 a pip on every trade, on every point that they take on the standard account. So effectively what you've earned is you've earned 20 pips from the first on the first lot. That's 20 pips approximately. I'm not including the spread here. Everybody has a different broker with a different spread. And then you've earned 40 pips from the entry to the final target on that second lot. So you've effectively earned 60 pips. And we did the same thing here on the the euro dollar. The euro dollar did pretty much the same thing. Here's Friday's low, non-farm payroll reaction. Here's where it tests. I actually waited until that candle here, this engulfing candle. These 3 candles here obviously could be grouped into one and create one pattern, but I need it on the 30-minute time frame. I'm very particular about making sure that I follow this technique by the rules. If it doesn't line up, even though I can see price could potentially move to its targets, I stay away from it. So our entry was on the close of that candle. The close of that candle, again, a bullish reversal engulfing candle. The close was 28.26. We're looking for a 20 pip stop, a 20 pip target. So our first target is 46. I'll go ahead and put a line right up here at 46, just below the fulcrum. That's or right at the fulcrum. That's 46. Remember, our entry is 26. Our stop is actually 6 right here, which was also the low on Friday. It was 0.5. That's really what I prefer to see, but just to give you an example of how effective this technique is using that 20 pip stop. So you'll notice that from the entry of 26, it goes as low and retests my stop at 11, but it does not stop me out. And then shortly after that, it finds some support and continues. And on this candle here, that candle goes as high as 49. So it reached my first target of 20 pips. So I lock in my first lot at 20 pips. Now if it continues, since the first target was 46, I'd be looking for 66. And here is 66. So at this point, we lock in the 20 pips here on the first lot, setting the remaining open lots at a break-even stop. It pulls back and goes as low as 38 with an entry here of 26, so we're not in jeopardy. It did not stop us out at that break-even stop. And then it continues, and then there's where it reaches its final target at 66. So again, we earned effectively 60 pips on this trade if you use 2 lots. If you only use 1 lot on the first trade and 1 lot on this trade, that's fine too, because that's exactly what this trading system is all about, is just trading it to the first target. 1 stop, 1 target. You're looking at a 20 pip stop, a 20 pip target. It's very simple, very effective. It sets up almost every single day on these currencies. Now, we stayed away from trading this on the dollar Canadian because it wasn't appropriate, it wasn't lining up correctly, and a few other cross pairs. This is why I wanted to show you these 2 trades. This is what we did in the chat room, effectively earning 60 pips on each one for a total of 120 pips for the day, or you could have earned simply 40 pips, which is a strong day, especially if you're earning $10 a point. If you'd like to learn how to trade opportunities just like this, I teach how to do this in my 7-week course, and as soon as you complete the 7-week course, you get to join the alumni chat room and you have an unlimited lifetime membership with no extra charges involved. If you'd like to get a free consultation to see if coaching, private coaching, is for you, and it's something that you really want to try, please go to forextradingcoach.com and watch the short video and follow the instructions, and there you can complete the online form so that you can apply for a complimentary one-on-one consultation with me. We'll talk live on the phone, and you can find out more about one-on-one coaching. Thanks for watching this video. I hope you traded well today.